I will follow up with them this morning.
Good morning, everybody. It's Monday, November 11th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here, December corn down a penny and a quarter at 4.29 3/4. January soybeans were up 4 3/4 at 10.35, and December Chicago wheat was down 13.5 at 5.59. Good morning, everybody. Happy Veterans Day to all of those veterans that are tuning in this morning, and certainly our own Ben Wigginton. And we appreciate all of your service to our great country. This is a great day to recognize those veterans. So, again, thank you to everybody. Ben, maybe kick us off here with a few thoughts to start the week. I know we got good rains in the wheat belt, if you will. Saw a little weakness there overnight. Outside of that, with the holiday today, reports will be pushed back a day, so nothing real fresh in the way of data to look at. But maybe share with us after you looked a little deeper at the report last week what your thoughts are.
Yeah, good rains across the U.S. I think that's encouraging for winter wheat. Then we saw some discussions about potentially over the weekend about the war between Ukraine and Russia coming to an end. And then thirdly, on top of that, we see the dollar gaining a tremendous amount of strength over the last few days since the election. And our wheat is an export market, and that's not going to help us in most cases. So I think those three things kind of heavy on the wheat market. And I look at corn and soybean spreads, old crop, new crop. I think that there is kind of a mindset that there may be more front-loaded demand before the inauguration takes place. I don't know how you can justify it looking at balance sheets, but for now they're doing what they're doing. We've seen, we talk a lot about corn spreads on here, but Nov has come in, basically 30 cents in a period of the last, call it 3-4 weeks. So I think this is just, we're kind of straddling the great divide here on what happens moving forward. And I think that soon people get their fill on what they wanted to do and buying and securing grains prior to any retaliatory or whatever term you want to use for it on tariffs. But I do think that we have to be very careful in taking the recency bias of the last time that we had this situation. China had a massive outbreak of ASF when that happened, and it's hard to separate how much of that big break that we had in grains, particularly soybeans, was related to to trade war type of items versus what was actually factored in from the ASF that hit. So, these markets are going to be sorting some things out for a little while. I think it's worth noting that beans got up and through briefly on Friday their 100-day moving average and sold off pretty harshly and kind of found a midpoint by the end of the day. But I think that becomes important because the short in beans is large, relatively speaking, to what we see in corn. So if we were to tick that off and see some more automated buying and covering, I think that would be a great opportunity. But I think right now eyes are kind of on spreads, and until they crack a little bit, you kind of just have to sit tight here and see what happens.
Very good. Dustin, we were talking briefly before the show. It's kind of this morning anyway, it's a story of the outside markets. Bitcoin is up 5,100 in the November contract, over 82,000. And we were looking this morning, there's an incredibly large bet above 90,000, $2.8 billion in options at the 90,000 strike in Bitcoin. And you had a couple of interesting thoughts, I thought, on that piece that could be pretty explosive as we continue to trade that market.
Yeah, it's just, I guess it's kind of a side thing. Just, we're not Bitcoin expert. I'm not a Bitcoin expert, but
No.
Yeah, if there's a ton of options, it's whatever market you're in. There's a ton of short options in a illiquid market. Like then it's pretty explosive. Just thinking in general, how does that relate back to grains? Like what's interesting, the dollar strength is leading to some pullback off the all-time highs for gold. Yet Bitcoin keeps making new highs on perceived, maybe that Trump is, pro crypto. But the whole thing is certainly, long-term inflationary for asset values in the U.S. We're talking a $7.5 trillion budget deficit over the next 10 years. So we saw this in long-term rates, rising post-election. We're seeing equities rise. They're kind of needing to compete on compete with a long-term rate, and just a pro-business atmosphere, obviously, with Trump talking about cutting taxes and stuff. That's generally inflationary for asset prices. So the back end of the market has been falling, in part because the Brazilian real has been falling, makes them more competitive. We're going to compete more heavily at the back end of the market than we are at the front right now. So I think that's going to be, Ben, you mentioned Nov rising. I think Jan is testing that 100-day moving average here the last 2 days. So kind of breaking through that glass ceiling could be interesting. That's at 1040 today in the Jan bean contract. Corn is already broken through the 100-day. It's looking, it's got a fairly good technical setup. And obviously we're getting a ton of demand. We just keep seeing those sales come through every single day. So it's that post-harvest lockup, and I'm hoping that we get some more selling opportunities out of it. Hopefully it continues to kind of push things a little bit higher overall. But this is a unique time of year where we don't have crop insurance floors anymore. We're through that October averaging period for old crop. We still are waiting until March until we get that new crop floor. We do have farm bill to count on, though. We've got the PLC floors known for next year. So if prices get too cheap, especially for corn, that can still be elected through March 15th. So there's some safety nets in place, but big question is, how is China going to react? Are they going to try to be pragmatic and start buying to avoid larger tariff increases? That could easily be a cheaper outcome for them, just to go and buy U.S. first, even if that, let's say that causes them 10 to 20% more expense. It's nothing compared to the tariffs. So we saw this in 2020 going into 2021. It surprised everybody then. We have to be prepared that they could go either way. They could dig their heels in and we go push new lows, or they could start to follow suit with the requests of the administration and push us to new highs. So I would expect some volatility out of this, if anything.
Sure. And in a couple of weeks, we're gonna bump into holiday markets there for a little bit too. So that's always interesting as you get towards the end of the month, and December contract stuff. So that's always going to be a big one to look forward to too. Any parting shots, guys, on the grains before we wrap there? Okay. Rylan, looking at last week, hog slaughter down 1.8%. Beef slaughter was up 0.7% and production up 0.8%. So I know kind of a crazier week with everything that was going on in the outside markets, but what are you looking at this week?
Yeah, we did see some actual liquidation in the cattle complex. I mean, we did see cash come down. So I think that's really the focus right now. I mean, last week and this week are typically a little bit more of a seasonally weaker time, especially in futures. But we are seeing that in the cash now. 187 was traded down in the south, 185 to 188 in the north. This is down like $3 to $4 in a lot of these areas. So I think just overall with the managed money holding on to these kind of massive long positions, not record in the cattle, of course, but we might see another little bit of panic here. I think just after that kind of news, just considering it doesn't feel like you've really priced in that later the later kind of negative news towards the end of the week. So overall, we'll see how the market reacts. I mean, I think it feels like we're starting off on a little bit weaker of a tone here. The WASI didn't really paint too much of a different picture, I think, than most were already expecting, but they did raise 2024 production by 25 million pounds. And I think, just according to them, just based on the bigger kills and heavier weights. So I think overall, just more of what the market may start to acknowledge. As we say, these weights can be a headwind, down the road. And it seems like it may actually kind of start to prove itself, but we got a lot of time to figure this out. Otherwise, on the hog side of things, cash ended pretty weak here on Friday, down $3.36. It was kind of mixed action, and the funds were reported as of last Tuesday as having a record long position. So OI basically did not change. It was down like 12 contracts in total commitment. So I think a lot of that pressure's been probably because of the roll in the front end, but overall we did see the carcass actually close lower on the week. So I think all eyes on the carcass right now and see if the bellies are going to hold up, see what the exports are going to look like this week, and just see if we can find a little bit better support here. Overall, the WASI report, they reduced production overall by 90 million pounds for 24 and 25. So I don't know if that's going to be too much of a factor just yet, but maybe something to keep in the mind in the back end, back everybody's mind.
Very good. Appreciate that. We'll keep an eye on everything, and Ryan will be around with his updates every day there. So thanks again, Rye. One thing to note, again, since with today's Veterans Day holiday, all reports are pushed back a day. So we'll get crop conditions for wheat and crop progress tomorrow. Export sales will be pushed back to Friday. So everything bumps back a day there. We appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like or subscribe. It'll keep you up to speed with everything that's going on with AgYield. And again, thanks to everybody that tunes in on a daily basis. We're doing this show every day. The markets are open at 8:15 Central Time, streaming live on X, Facebook Live, and YouTube Live. Again, happy Veterans Day to everybody. We hope everybody has a good start to the week, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.